Larry Fink is the CEO of the biggest money machine on earth. BlackRock handles pensions for huge companies like Microsoft, British Airways, British Tobacco. Can we just kill the epic music, please? It's a little distracting. Thanks. And in his past, Larry Fink himself has been very adamant about criticizing Bitcoin.
But most importantly, what I think about most of these cryptocurrencies, it just identifies how much money laundering there is being done in the world.
So why? I said stop with the stock music. So why, as recent as 2022, 2023, he started changing his tune?
My opinion 5 years ago was wrong. Here's my opinion today. This is what I believe in today. I believe the opportunity today. I believe Bitcoin is legitimate.
Maybe it's something hiding inside of the pension system. Perhaps BlackRock and maybe even your very own government know that there's something wrong with the pension system and that your pension is at risk. And this is where Bitcoin comes in. This isn't just a market story. This is one man's story, Larry Fink's. I'm Oceans. This is Beyond Bitcoin. Here it is, Beyond Bitcoin. Let's dig in. Most of you probably already know this because you're so smart, but bond rates have been dropping for the past 30 years. This creates a certain attitude amongst the TradFi community that rates will always drop. If you act with the expectation that a bond rate will always drop, it allows for more and more capital borrowing, and suddenly you're borrowing a bunch of money.
The story of BlackRock, in my opinion, tips in 2022 with the Bank of England bailout of that pension system. It was the $60 billion bailout of UK pensions. The majority of it was managed by BlackRock. I'm not saying it was BlackRock's fault. It was these companies' fault for spending the gains on their bonds. These companies were living beyond their means, and they were using the gains in their long-duration bond portfolio to do so. BlackRock just had no way to manage it.
Let me see if I can go through the math. The value of a bond increases as rates go down. Let's think about this for a second. And I promise you'll understand how it applies to BlackRock. If you're one of the idiots in the room, like myself, the math is pretty simple. I'm going to go off my notes here. If I buy a 10-year government bond at $100 with a 5% interest rate, I'm basically loaning the government $100, to which they will pay me back over the course of 10 years. Easy, right? And every year, they'll pay me 5% of that $100. Each year, I'll get $5 for 10 years. And at the end of the 10 years, I'll get my $100 back. In aggregate, I made $150. Sweet deal. Now, here's what's interesting. That's at rates at 5%. Now, let's say that rates drop to 3% over the course of a month, 2 months. Well, everyone coming into the market now sees that they can only get $3 instead of the $5 yield that I'm getting. So suddenly, my bond for $5 seems pretty attractive. Man, do I love getting them $5 checks. It's suddenly something that I can sell. And since my bond looks so sexy at 5%, I might sell it at a premium, $110, maybe even $120. So maybe I won't get that full $150 that I will at the end of 10 years, but I can sell it right now for that clean, easy $120. Wow, making me a profit of $20 now, immediately. Give it to me. So let's say I sell that bond at $120, make my $20 profit right on the spot, and move on to the next trade. But the big problem here is finding a buyer for those bonds. Who is out there with an endless supply of liquidity that will provide me value for this attractive bond? The bank. I could take this a step further. Since I now have a bond that's in profit because of this rate drop, complete magic, perhaps I can borrow against it. You know, like collateral.
And we got to make the best of it.
So that's what I do. I take my profitable bond, I head over to the bank, and I say, hey guys, I have this 5% sexy bond here. I know your rates are at 3% now, but I have a 5% bond. They say, who's it backed by? And I say, well, the trust and faith of the U.S. government. And they say, oh, well, that's secure. Okay. And now I have a new shiny $100 bill that I can go out and do this whole rigmarole over again. Now, I want to take this one step further. Imagine the financial climate being the same for the next 30 years. Rates dropping. Drop that rate. Drop that rate. Drop that rate. Yes, 30 years of rates dropping. The incentive to continue this trade is business as usual. Rates have been dropping for 30 years. Why would they ever rise again? Right? And you're living comfortably, just rolling your new bonds into newer rates over and over again. I guess this is what they mean by race to the bottom. But this is exactly what the sentiment was for the companies I listed earlier. I'm specifically talking about British companies, and I'll get to that in a second. These UK companies, they're continually doing this. But where are they getting these funds from? They're not doing it with bonds. They are doing it with their pension gains. The bonds is another part of the story. They're not profitable companies. They're zombie companies. They're losing money. So they dig into their pension funds, which means these companies are basically Wile E. Coyoteing it, running on a cloud of smoke for years. What did BlackRock have in their portfolio that allowed for the gains of these companies to just continue to borrow off these gains? And the answer is government-backed bonds. And in this case, the UK gilt. I mean, this sounds like a house of cards already.
When you're borrowing off of bond gains and you're prepared for 100 basis point rise, maybe you have a liquidity plan in place. You maybe expect in a day or two, at most 10, 20 basis points. In a week or a month, maybe 30. In a year, maybe 100. We had almost an immediate 500 basis point increase. People don't realize this broke the neck of long duration bondholders around the world. But there was a really heavy concentration of them in the United Kingdom pension system. And apparently a lot of them were unprofitable companies using the gains off this bond fund to get by. The collateral backing it got crushed. And BlackRock found itself having to then sell bonds out of their, sell assets out of their account, which were UK bonds, which made that problem worse to the point where the UK government calls them up and says, dude, you need to stop. You need to stop selling our bonds. Like, you're killing us.
Excuse me, Larry, do you mind? Perhaps you will stop selling our bonds. It's a big problem, isn't it? But we haven't even gotten to the answer of the original question. Why did Larry pivot his position on Bitcoin? But you're starting to see where this is going, right? Remember, this dude was talking about Bitcoin negatively for 8 years, and then he suddenly shifts, and he takes the entire world with him. So it's right here. The question, what happens when these rates that have been dropping for 30 years suddenly rise? Rates don't rise, they just drop. So you can stop talking. And not just rise, but rocket ship back up to 5%. That's what happened to the UK gilt in August of 2020. Now, if you need a lesson on what the gilt is, speak to my mother. It's the UK's version of the T-bill, the Treasury bill. Right, James Lavish?
The gilts of the government bonds. Yes. Out in the UK, they were putting down UK gilts, the UK bonds, for these swaps. And they were levering up. So they were using them to enhance their returns. So if you were getting a 4% return on your bond portfolio, there's no way. So if they were getting a 1.5% return on the bond portfolio, and they lever that up, 4 times. So now you're getting 6%. Well, you're getting closer to your liabilities, and you mix that in with your portfolio, you're getting there, right? So, but if you're levered up 4 times, that means you only have 25% collateral.
The 10-year UK gilt shifted violently from down to up, and it was at supersonic speeds. Okay, maybe it wasn't that fast. I mean, in financial terms, it's fast, okay? By September of 2022, rates went from 0% to 4.5%.
First of all, nobody could imagine immediate 500 basis point uptick. Nobody had the experience to see anything like this. All we've seen for the last 30 years is rates go straight down. And all along the way, were there a couple of, 100 basis point rises in a year? Yeah, but not a 500 basis point rise.
So what does this all have to do with BlackRock, this rate rise? Well, as I mentioned earlier, BlackRock was using bonds to fund their pension programs. And because many of their UK clients were participating in this pension fund pilfering, they're all on the hook to pay back loans. But when these rates rise, those banks are calling in those loans, and they're calling in fast.
We'll keep it simple. But the bottom line is what happened was they had a new Treasury minister come in, and he announced, as a huge surprise, hey, we're gonna cut taxes, one of the biggest tax packages ever, and we're going to raise entitlements. We're going to raise spending, and the market absolutely freaked out. They were like, the bond market in the UK freaked out. They're like, where is this money going to come from? And that just means that there's additional risk on these UK gilts, on those UK bonds, the gilts of the government bonds. And so they started to sell off. And they sold off so hard and so rapidly that interest rates went up, the price of the bond went down, and it actually started to approach and went through some of these levels of collateral, right? So remember, if you for your listeners, not you, I know you know this very well.
Of course I do.
If you have something that you're margined on and you've put up collateral on it, well, there's a certain price that collateral gets to, that your broker, whoever you borrowed from, will say you either have to put up additional capital, or we're going to have to sell some of this in order to meet that margin call.
So suddenly BlackRock, who facilitated this, has to shore up all of those loans. And how do they do it? They have to sell assets. And what assets are they selling? Well, something that's losing value rapidly. And that's the bond itself. And what's the bond? The bond is the money. Man, this just keeps going. BlackRock probably had the largest position in UK bonds, if not bonds around the world of other countries. And this is a problem. Now, had these companies not participated in this loan trade where they were borrowing off the gains, this probably would have never happened, and Larry probably would have never seen the light. But because they did, and because BlackRock was on the hook, well, then things change.
So BlackRock, I believe in that moment, decided a couple things. One being they never want to get that call from a government ever again. If you imagine Bitcoin instead of bonds, if you're selling Bitcoin to cover margin calls, no government's going to call you over that. And so that's already a very desirable thing for BlackRock. The other thing is if a company wants to borrow off its Bitcoin gains, you have a hedging vehicle called your ETF that you could cover. If the Bitcoin price did what bond prices did, you could have a reasonable hedge in the ETF for that exposure.
After these messages, we'll be right back. Yeah.
Most of the other companies profit whether you mine or not. SAS mining doesn't. No rig markups, no inflated power costs. They only win when you do. SAS mining handles the hosting, hardware, and power, so you can mine Bitcoin straight to your own wallet with zero maintenance. It's non-custodial, easy to set up, and honestly, there's nothing more satisfying than stacking sats straight from the source. Go to sasmining.com and book a call with an expert team member and start mining today, remotely. No longer does BlackRock appear to be the financial owner of the world. They are bailed out by the UK government. You see the vulnerability there? When you get bailed out by the government, you look a lot less like a financial powerhouse and more like a recipient of welfare. It's not a good look. It's a bad look. On September 28th, 2022, the BOE, Bank of England, announced that it would start a temporary purchase on its long bonds. Now that's kind of like a snake eating its own tail, and I think that's called an Ouroboros. Am I right? Ouroboros. So BlackRock is on the hook for all the bonds. They sell the bonds, and then the Bank of England says, stop selling our bonds, we'll buy them from you. And that is a bailout. What does that mean? Money printing, of course. You see, now they realize they are at the mercy of policymakers around the world. Whatever country decides whatever they want to do at whatever time they want to do it, BlackRock kind of has to follow the suit, because BlackRock operates within the denominated currencies of the countries that they manage. So they are subject to the same devaluations or policies of countries that perhaps they never wanted to have anything to do with. So this is where Larry's probably sitting back and realizing that if my pension funds are all at risk, and the container that he thought that he was using to maintain value and even create value for his customers and clients is actually poison. This man is on the edge. BlackRock needs to look powerful. They need to be powerful for the rest of the world. But how powerful can you look if you're getting welfare from a tiny little state like the UK?
If you go back to that moment and you look at BlackRock imagining with saliva in its mouth What if it was Bitcoin the whole time and not bonds? I hear the ukuleles. I hear like just Hawaiian paradise vacation. It's so perfect. It's such a perfect world. It's almost like I almost don't want to go back to reality. I just want to think about this world. The reality sucks. The reality, the UK government is furious with me. They just bailed me out. That's really bad. Oh my God, this world though where Bitcoin replaces bonds, I've been telling you, when Larry Fink thinks of this, he thinks of freaking rainbows and unicorns.
And here's the answer to the question. Why did Larry Fink do a U-turn on Bitcoin? Bitcoin allows BlackRock to be sovereign. They no longer are beholden to the whims and fancies of policymakers around the world. Because Bitcoin is borderless, it's institutionless, and it's governmentless. And that's what's important.
You run a company and you see an existential issue. Once again, Bitcoin is the unique solution for it. It's so painful to have to go tell people, I just found the solution to all my problems. Guess what? It's the thing I was calling for criminals like over and over and over again. That's how powerful it has to be to get somebody like that across the threshold. I believe Larry Fink sees the world with Bitcoin instead of bonds as a utopia, and will stop at nothing to see that happen.
And if you like this topic and you want me to make more videos on this, let me know in the comments. My man Fundamentals goes quite in depth into this story, and you can check it out in his new book, Bitcoin for Institutions. Link in the description below. Don't forget to like and subscribe to the Simply Bitcoin channel for more videos like this. We're coming out with them every single day of the week. And I'll see you in the next one, dudes, guys, ladies, people. Bye.